Is this week going to be the week we finally see a breakout on the US dollar? Well, we've been ranging for a little bit, and in this video, I'm going to be going over the current landscape for the US dollar, and more specifically, gold, and some of the setups that I'm seeing right now on the precious metals market. This is actually looking really interesting, and it takes the place of my most interested market to watch going into this week. So let's go ahead and jump in. So if you've been watching the channel recently, then you know I've talked about this topic on the screen quite a bit. The idea that rate cuts are coming in 2024 and that this changes the landscape tremendously for what the Fed has been sort of focused on. In the last year or two on this channel, we've talked at length about the idea that the Fed was going to rate hike to get inflation under control. Well, now that it does seem like we're starting to see inflation get under control, the conversation has gone from how high are interest rates going to go to at what point are they going to actually start cutting them, and what does that do to markets? Well, it's a huge relief for the precious metals market, and if you look historically, generally speaking, gold goes up when interest rates get slashed, especially when they get cut quickly due to recessionary fears. So let's take a quick look at the price action of gold. So in the last few weeks, we've seen a pretty steady downward trend, and you can see anytime price was able to try and poke higher, sellers took control of it and pushed it right back down. It's been a seller's market, admittedly, for the last few weeks, despite all the dollar weakness, which has actually been kind of interesting. This recent pullback in the dollar is the catalyst to why gold has not been able to break out, right? This strengthening US dollar, despite the overall downtrend, has been sort of the issue for gold bulls. But what we saw recently is a little bit of escalation in the Middle East, and anytime you get concerns about war or any sort of global conflict, it usually results in a breakout for gold. And that's exactly what we saw right here at this level around 2037, 2040. What we saw is a huge move higher off of the concerns going on in and near the Red Sea. And of course, that movement is seemingly holding its ground, which is a good sign for gold bulls. You're seeing, of course, the rate cut story continue to be a positive thing. If we actually scroll back in time, it was a huge move higher. This was the idea officially that the Fed kind of came out and just said that they expect rate cuts. That was when Jerome Powell was on the stage. It caused a huge run up in the price of gold. But since then, we've seen a pretty moderate pullback. But with this breakout, I think things get kind of interesting. So again, I think this was big progress for the bulls being able to finally break out of a key level of resistance. Now, the question for me is, how do I get in? Well, for me, I'm actually looking for a possible stalling out and pullback into that very same level that we discussed, this level in green around the 2040, 2035 level. That's where I'm looking for possible continuation plays on the gold market. By the way, I just want to clarify, I'm still pretty sick. I'm under the weather, and that is probably why you recognize my voice sounds really weird. I promise I'm not trying to just psych you out. It just sounds really weird because I'm still getting over a cold right now. And maybe this is a good time to ask for you to subscribe to the channel and hit that thumbs up button if you enjoy my content and if it's helpful to you in any way, shape, or form. So again, the idea is the pullback on gold would be a possible entry point for me to look to get long and to ride this thing a little bit higher. But what is going to cause this thing to move higher? Well, it's likely going to be a result of the dollar either getting weak or if it does not get weak, keep me out of a particular trade. And I'll go over what I mean by that. We're looking at the dollar index on the 4-hour chart, and what we can see here is that we've really struggled to break out of this range. We've been both on the demand side pretty strong and supply side pretty strong. So, what we're seeing here is indecision on the dollar index, and we have to kind of look to the next major move or next catalyst in markets to really get that decisive breakout one way or the other. We'll discuss that in just a moment. But in order for gold to really meaningfully move higher, what we probably need to see is the dollar index to kind of come down from these highs and potentially even break the lows. Now, of course, that's a big ask because we could also break to the upside. And if this does happen, it's going to probably, if it meaningfully breaks out, like if we get a strong close significantly higher above this level of resistance, it's probably going to keep me out of getting into aggressive long trades on gold, because that would signal that the dollar could potentially have more room to squeeze higher. So as long as we're able to break back down and hold this resistance area, that's going to be a green light opportunity for me to watch gold a little bit more closely. Now, one thing I will add while we're on the topic of the dollar is part of the reason it's gotten, one of the things that gold had a nice move higher on was actually yields. Yields dropped pretty aggressively. And again, this is still signaling that rate cuts are still coming. So next up on our to-do list is to take a look at the smart money indicator for specifically gold. Now, what does all of this mean? It's a lot of lines on the screen. Well, it's really simple when you actually strip it down to its individual pieces. In the white line, we just have the price of gold. In the blue line, we have net COT positioning. These guys are your institutional money. What are they buying? What are they selling? We constantly track that on my channel, as it is a very useful indicator for gauging the sentiment of professional traders. At the same time, we can take a look at retail sentiment, which is the crowd sentiment. What does the crowd think about gold? Are they bullish or are they bearish? And now if we focus over here, what we can see as of the latest is that, the price action of gold has been overall trending to the upside. You can even see that recent bump in the price of gold as well. As that's trended higher, what I want you to draw close attention to is this blue line is institutional money. And it seems to continue to be bullish overall on the price of gold. Now, the most recent filing was slightly bearish, but this is why we built the smart money indicator. The COT data can be inevitably very difficult to read, especially when you get it from the source. It's just a text file. It's a horribly, horribly hard thing to read. So we've built indicators to actually monitor institutional money flow a little bit better. Overall, they are still very bullish. And if you take a look at retail traders, on the contrary, they are still overall bearish on the price of gold. And so I think that that is actually a very good indicator and a confirmation tool to actually continue to look for bullish setups on gold, going with smart money and against the crowd. Another way of looking at the COT data is to take a look at our net positionings tool. This allows us to look at overall institutional money holdings on particular assets. Are they long? Are they short? And we're, of course, talking about the futures contracts traded on the COT data here. So what we can see is that the price, that the gold market is actually very, very bullish. And I find this to be really cool, especially when you actually compare it to its counterpart. Of course, the gold market is quoted in dollars. For those of you who have been watching the channel for a while, you might have remembered that the US dollar used to be like way over here. It's come down meaningfully from that super bullish net positioning standpoint all the way down to like a mid-range. So when I look at gold over here and I say, well, gold is still very much institutionally bullish, and then we take a look at the US dollar in its counterpart, that's a huge difference. And I find that to be very, very confirming that we could have more upside to the price of gold compared to the COT data and, of course, the geopolitical events that are going on. It does seem like gold has room to go higher, not to even mention that interest rate cuts are a possible bullish catalyst this year as well. By the way, guys, if you enjoy our software and you would like to pick up a copy for yourself, we are a company out of Atlanta, Georgia. We build these tools specifically for traders to get more data in their hands to better take on the markets. If you'd like to trade with more data and you'd like to get a copy of the Edge Finder, click the very first link in the description down below. You can click chat now once you do that, and you can speak directly with someone on our staff who can get you set up with a copy of the Edge Finder for a super discounted rate. And today only, if you shoot us a direct message, we're doing 25% off. If you shoot us a message using the very first link in the description, you'll be getting a huge discount off of the product. You can message us to find out information about pricing details and all sorts of good stuff. Next up on our list of things to consider is the oil market is selling off today. And you may be wondering, why is this happening? Isn't there like a geopolitical tension thing that's causing, gold and oil and all those things to spike? Well, oil is a specific market, and oil has seen, yes, some concern. We traded higher off of the Red Sea events. However, it's traded down because there's also the other side of oil in the lack of demand. China has still had a struggling reopening of their economy. We're not seeing a booming China, which of course is a huge demander of crude oil. And at the same time, we also see a lot of other countries, notably the US, massively increasing their production. So the supply of oil is increasing. While yes, there is also the concern about the geopolitical events, you have to consider all angles with oil. And right now, it does seem like a market that is pretty range bound. I'll be watching for signals, whether it be to the downside or to the upside, but currently this market I'm very neutral on. And then just in reference to the Red Sea events, what we can see is that oil edged down on Monday with Brent crude futures falling to around 77.5 a barrel as investors monitor disruptions in the Middle East after US and British forces launched strikes to prevent Houthi military in Yemen from attacking Red Sea ships. So we saw some volatility there, of course, off of the back of this news. Now let's talk about a market that I'm not so neutral on, which is of course the S&P 500. I am bullish overall, but I do think that this has room to pull back further. And the reason I pull this one up after oil is because remember that falling oil prices can actually be good for the inflation story. If oil prices are coming down, that's less money people have to spend at the pumps and have, that is a massive kind of de-escalation to the inflation problem that we're still kind of working our way through. And I should also mention that we are going to have a little bit of lighter volatility today in the markets due to the US traders. A lot of banks are off for the day for MLK Day, of course, celebrating Martin Luther King and his civil rights movement and his life and his accomplishments. So again, off of that regards, we expect a little bit less volatility. The stock market itself is not opening up today, and bank holidays are kind of going on right now for that. Of course, the Forex market, the commodities market, the futures market, still trading, so there is still volatility to be had, but I thought that was worth mentioning. So anyways, where do I think the S&P can go? Well, we sort of double topped up here, and for me, I think that a very moderate pullback would be this move back down to 47.55. And, I took a trade over here. I was long on the S&P during this time. I rode this thing up and I ended up closing a trade for just under $9,000. It was a really good trade for me. And I don't say that to brag because, at the end of the day, I get it right sometimes, I get it wrong sometimes. But I say that from a, how am I playing this personally? Well, I took my profits over here because again, we hit resistance and we were not able to break through it. So I'm putting my money where my mouth is. I am also looking to get back into the trade, but I think a moderate pullback is probably due, if not more of a pullback, perhaps even to like 47.40 before we try and retest those highs. The S&P 500 has kind of been, it found support over here. This was the reasoning for my trade entry. And I will say, if I'm just wrong about that, about the pullback idea, and we just break straight through the highs, then I may just look to go ahead and try and join the move on a retest if I can get that set up. Turning to the NASDAQ, we have a very similar story. You can see prices seemingly struggling to get across this 16,880 level on NAS 100. I'll be watching to see if we can either break through that level, or if we do go for a pullback, there's plenty of room here to the downside. That is a slide of about, let's see, from the high, that's a pullback of just 1.25%. So very reasonable pullback, but I do think we do have kind of an overall target of getting back up to this 17,000 area. We'll watch that close on NAS 100. And here's a look at US 30 or the Dow Jones, which is probably the choppiest of the three right now. You can see it's already kind of pulled back off of the highs, and trying to find support here around the 37,500 mark. Again, if the NAS and S&P are going to pull back, it's likely that this one could also pull back further. I'm waiting for either on this one. I'm waiting for a breakout through the highs or a deeper pullback. Of the three, I would say right now, this is my least favorite one for possible trade setups. And while we're on the topic of indices, I wanted to mention the AAII Investor Sentiment Survey just to take a look at what overall market sentiment kind of is for the stock market. This is, of course, a reading for the next 6 months. Now, it's not necessarily a short-term thing, but it does give you an idea of sentiment, and traders can still take advantage of using this resource. So overall, we have still a bullish kind of majority in the room when it comes to stock market forecasts, indices specifically, and a minority of bears. So I would actually like to see this widen out a little bit. I'd like to see a little bit more bearish interest in the AAII sentiment, as I do generally like to enter long setups when there's a bit of a more mixed sentiment in the room. We can also reference the put-call ratio, which will show us, of course, how in demand puts, which are bearish bets, are relative to calls, which are bullish bets in the stock market. And of course, this can be very useful for judging risk on versus risk off sentiment. What we can notice here is we're trading currently at 0.88, that is below 1. So we are sort of leaning more towards bullish sentiment from retail traders, which is fine as long as it doesn't get too extreme. Generally speaking, I like to kind of spot this as a, if it's very, very overdone one way or the other, that's a contrarian signal. But if it's slightly in favor of one or the other, I don't see that as any sort of red flag. Also, I do want to mention that if you're not following our free Telegram channel, we're putting out analysis and updates throughout the week. Frank and I run this channel. You can see here is Frank and I. Really, really sweet picture of us. But if you'd like to see our analysis throughout the week and more charts sent directly to your Telegram, make sure to join us there. It's totally free, and the link is down below in the description. Thank you guys for watching the video. If you did enjoy, make sure to hit the thumbs up button, and we'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.